I'll be providing a brief macroeconomic overview to set the table for our discussion on our framework. And so, starting with the labor market, employment growth has slowed from highs at the end of Q4 2024. Essentially, it's been flat over the past year, but we are still close to full employment as measured by the Fed. Next slide, Ab. And inflation has also continued to come down, and the last bit has been a little bit sticky. We're still above the Fed target. And if you look at the drivers of inflation, shelter or housing costs continue to be the biggest component of inflation, although that too has shrunk somewhat from the last couple of years. This, of course, is somewhat backward looking, and so doesn't take into account increased uncertainty from policy changes such as the impact of tariffs as well. And next slide. When we're looking at valuations, we have to look at it two ways. So starting with appraisal values. So appraised values have come down about 20% from peak on average. This varies by property type. So office values have come down significantly more, with retail values actually experiencing the lowest decline from peak. We are likely near a trough, though. If you look at the Q4 decline, it was only 0.2% from the prior quarter. And if you actually exclude office properties, values increased for every other property type within the benchmark. And if we go to the next slide, we can look at transaction values as well. Now, these are transactions within the NCREIF Property Index, and those were essentially close to flat. There's not a huge sample size here, as transaction volumes have been somewhat lower. But even for office and retail properties, we started to see somewhat of cap rate compression over the last 2 quarters. Again, these are based on very small transaction volume sizes, though. And if we go to the next slide, speaking of transaction volume, we have been at levels that were following the peak transaction volumes from just coming out of COVID to being at below pre-pandemic levels. Except we did see a spike starting in Q4 of last year, especially for apartments, which saw a very large increase year over year for transaction volumes. If we look out over the forecast for 2025, the projection is that we are still going to be slightly below pre-pandemic levels, but approaching pre-pandemic levels, and then getting to exceeding those levels starting next year. And then if we go to the next slide, the big question that we're starting to see more headlines about is will there be a recession? There's a lot of uncertainty in the economy that is leading to economists essentially revising their predictions. And if we look at the most recent predictions from these economists or banks, they are upward revisions to the probability of a recession occurring. And those that have released their predictions over the last month, so in March of this year, have revised that upwards to a greater probability, still below 50%, still below 33% or 1/3, but an increase from their prior estimates.